All right, this video is going to be short-term versus long-term rental investments. 4 reasons we went short. Are you thinking about diving into real estate investments but can't decide between short-term or long-term rentals? What if I told you that one of these could dramatically boost your income faster than you think? Today we're going to deep dive into why we chose short-term rentals over long-term, and I'll tell you the 4 key reasons that not only changed our minds but also our profit margins. Just a few years ago, I was just like many of you, skeptical, unsure about the best path for rental property investments. Long-term rentals seemed safer, less complex. However, after attending a real estate seminar, I was inspired by a case study of an investor, tripled her income with short-term rentals. This cued my curiosity and led me on a journey to discover the potential of short-term rental investments. Now, I want to explore together how this decision came to be more profitable and suitable depending on your lifestyle and investment goals. Higher potential income. The first and perhaps the most enticing reason we went with short-term rentals is higher potential income. Short-term rentals generally charge per night, which can significantly exceed the monthly rent you might charge for the same property on a long-term lease. For example, a property that might rent for $1,000 a month long-term could fetch $100 per night as a short-term rental. Assuming 75% occupancy, that's about $2,250 per month, more than double the long-term rental income. One of the most compelling arguments for choosing short-term rentals over long-term rentals, one was the potential for higher income. Short-term rentals, often listed on platforms like Airbnb, VRBO, are priced per night, which typically allows for a higher overall monthly income compared to traditional month-long leases. For instance, a property that could be rented out for $1,000 per month on a long-term lease might earn $100 per night as a short-term rental. Even with a conservative occupancy rate of 75%, this translates to approximately $2,250 per month, significantly higher than the long-term alternative. This high revenue potential is due to several factors, including the ability to adjust pricing dynamically based on your demand, your season, and your local events. During peak tourism season or special events in the area, rates can be adjusted to reflect the increase in demand, maximizing your income. So things like Christmas, Thanksgiving, those different holidays, you have a high peak depending on the area, or those areas where people want to run away from the winter and you have a short-term rental in a sunny location like Hawaii. Additionally, short-term rentals often attract travelers who are willing to pay more for furnished, well-situated properties for the sake of convenience and experience, which they perceive as being more valuable than the standard long-term rental units. Moreover, short-term rentals can include additional income streams that are not typically available with long-term rentals. These can include cleaning fees, pet fees, charges for additional services such as laundry or local tours. All these factors contribute to making short-term rentals a highly attractive option for property owners looking to maximize their returns on investments. So, as you look at the market flexibility, short-term rentals offer incredible market flexibility. You can adjust pricing based on your seasonality, demand, and local events. This dynamic pricing strategy allows you to capitalize on high demand periods when you can charge premium rates. Moreover, in times of low demand, you're not stuck with a fixed income but can adjust the price to maintain occupancy. Short-term rentals provide property owners with an unmatched level of market flexibility. This adaptability allows landlords to adjust nightly rates to optimize occupancy and maximum revenue, which is especially useful in markets that experience significant fluctuations in demand through the year. For example, a beachfront condo could command premium rates during the summer months, but may not be as desirable in the winter. With short-term rentals, prices can be adjusted seasonally, ensuring the property remains competitive and profitable year-round. So you can also look at other avenues during those peak times. Maybe it may not be a great option for the short-term rental, but you can also look at mid-term rentals, which is more of your professional travelers that's traveling for 90 or 120 days of travel. And those are still optimal more than your long-term rental because they still want a furnished location that is moving ready for their short term there for work. All right, so these flexible extensions to reacting to market trends and economic shifts more rapidly. If a new tourist attraction opens nearby or a large company moves into the city, short-term rental rates can immediately reflect these positive influences. Conversely, in the event of downturn or off-peak seasons, rates can be lowered to attract more bookings, maintaining a steady flow of income that might be possible with locked-in long-term lease rates. Additionally, property owners can experiment with different target markets and advertising strategies without long-term commitments. For example, they can tailor their listing to attract the business travelers during the week, like I mentioned earlier, and leisure travelers during the weekends or holidays, effectively tapping into diverse customers' bases to optimize occupancy rates. Now, another piece of this is the property maintenance and upkeep. Maintaining a property with short-term rentals can be more manageable in the long run. Since guests stay for a shorter duration, the regular inspections and cleaning are part of the routine, helping you keep the property in a top condition. This can lead to fewer long-term maintenance issues as problems are spotted and addressed promptly. Plus, the frequently updates and improvements keep the property attractive and competitive in the market. Maintaining a property through short-term rentals can often lead to better overall care and condition of the real estate. Because of these properties are cleaned and inspected frequently, usually after each guest departs, owners and managers can keep a close eye on the property's condition. Now, this regular maintenance helps identify and address repairs needed before they become costly problems, which is an advantage not always possible with long-term rentals, where issues might go unnoticed for long periods of time. Frequently, updates and renovations are more common in short-term rentals, driven by the need to stay competitive in the market where guest expectations are high. Properties need to offer clean, stylish, and up-to-date accommodations to maintain high ratings and attract bookings. This constant improvement cycle often leads to a higher standard of property upkeep, which not only benefits guests, but also preserves and can increase the property's value over time. Moreover, the feedback mechanism inherent in short-term rental platforms provides owners with immediate insights into what guests appreciate and what might need changing or fixing. This can range from small amenities to significant upgrades, such as direct feedback. Is less common in long-term rentals, but is invaluable in maintaining high standards and guest satisfaction in the short-term accommodations. Each of these reasons highlights why short-term rentals can be a more attractive option for many real estate investors, offering higher income potential, greater market flexibility, and a better property maintenance. These factors contribute to the growing popularity of short-term rental investments as a dynamic and lucrative component of the real estate market. Now, finally, short-term rentals provide an excellent opportunity for diversification. By spreading investments across various properties and markets, you can mitigate risk associated with economic downturns that might affect specific regions or property types. Short-term rentals allow you to adapt quickly to market changes, unlike long-term leases, which can tie you down to a particular economic climate for extended periods. Diversification is the key strategy in any investment portfolio, and short-term rentals offer unique opportunities in this regard. By investing in properties that serve as short-term rentals, you can spread your investment risk across various markets and types of real estate. For instance, you might own a beachfront property in a tourist town, a downtown apartment in a major city, and a cabin in a quiet rural area. Each property caters to a different type of traveler and market demands, which helps balance out the revenue stream throughout the year. This diversification means that even if one market experiences a downturn, the other properties might still perform well, ensuring a more stable overall income. Short-term rentals allow for rapid adjustments to changing market conditions. For example, if a new local regulation affects rental properties in one area, you can quickly shift your focus and marketing efforts to another property in a different location, minimizing potential income losses. Furthermore, the short-term rental market allows investors to experiment with different property management strategies and amenities that can appeal to various guest preferences, thus tapping into multiple revenue-enhancing opportunities. Whether it's offering a pet-friendly accommodation, maybe incorporating smart home technologies, or providing luxury add-ons like a spa service or a personalized tour around the area, these can all serve to attract a wider array of guests and create an additional income stream. So, harnessing the technology and innovation as far as short-term rental investments are also at the forefront of many from technology and innovation within the real estate market. Platforms like Airbnb, VRBO, or Booking.com have revolutionized how property owners connect with potential guests. These platforms provide sophisticated pricing tools that analyze data to help owners optimize their rates based on real-time market demand, competitive analysis, and historical data. This tech-driven approach helps to maximize occupancy rates and rental income. Additionally, automation tools have simplified many aspects of managing short-term rentals. From smart locks that offer self-check-in and check-out processes to apps that manage cleaning schedules and maintenance tasks. And later I'll get into some more, in another brief I may break down those different technologies that you can leverage up that I've found to work better for us. Each one you would have to try to play with to see how it fits into your program. Every program is not going to work for everyone. You're going to have to trial and error through those depending on your market and your teams that you have. All right, so this efficiency is particularly advantageous for investors who own multiple properties or those who do not live near their rental properties. The use of virtual reality and augmented reality in marketing properties is another innovative practice gaining traction. These technologies can offer potential guests virtual tours of their property, enhancing their booking experience and increasing the likelihood of reservations. I see those tools as that stepping stone to working with the guests to give them a look and feel of what they're actually going to get into. That expectation management. Because a lot of people, when they make the reservations, they're unsure of how things are really going to turn out. And then it also holds that accountability that you've shown them how things look in real time, instead of them showing up and seeing things and assuming that those pictures were outdated for years to go. So by adopting these advanced marketing tools, short-term rental owners can make their property stand out in a crowded market, appealing to tech-savvy travelers looking for unique and convenient rental experiences. To sum it up, while both short-term and long-term rentals have their advantages, our experience leans heavily towards the short-term for higher income flexibility. That's key. Better property maintenance and a risk management. But remember, the right choice depends on your personal circumstances and investment goals and risk tolerance. If you're intrigued by what you've learned today and you're considering entering the real estate market, don't miss out on our next video, Investing in Residential Real Estate, How to Get the Best Deals. Dive deeper with us to uncover the strategies to maximize your investment returns. Like, subscribe, and share with others. Thank you.